Hey, what is good everyone, it's Cam from Cog here, and today I'm going to be showing you my $40,000 stock portfolio. At age 20, this is all ASX stocks, so all Australian stocks, so it's super easy to follow. If you're in Australia, you don't have to download some sketchy software to invest in. You can do it pretty much all through your bank. Pretty much all my investments now are all in CommSec or CommSec Pocket. Oh my god, this video is just an ass, like dislike. Calm down, I really don't care who you invest with. I'm just saying I use CommSec, but you can use any other bank or any other trading platform. It really doesn't matter.
So you're just making this video to flex on us?
Hey, calm down. I'm just trying to show you what I do so that I can impart some wisdom onto your young boys.
Hey bro, you're only 20 and nowadays $40,000 is only 1/10 of what Mr. Beast gives out for free. So this really ain't nothing.
Okay, you know what? That's actually pretty fair. But anyway, let's get into the video. So to start off with, we've got the boring stuff, the ETFs that I have on CommSec Pocket. I've made a video about these in the past, but I didn't really go through how much money I actually had invested in each of the ETFs. So to start off with, from top to bottom, I've got $1,767 in sustainability leaders, currently down $1 on that investment over about like 1 to 2 years, I guess. So really in 1 to 2 years, it pretty much hasn't changed at all.
That's cap. I think I just have the worst timing of all time.
Then we got emerging markets. This is an ETF with like a bunch of random like kind of growth stocks from like China and India and all those kinds of countries. So I have currently $1,975 in emerging markets ETF. It's currently down $211, down 9.68%. Pretty much since I've had it, just hasn't done well. It's kind of been up and down, but I guess I really just invested it in its peak. 2 years ago, it definitely peaked, as you guys can see on the graph on the screen. It's been going up for a little bit now, so hopefully one day it will recover, but it doesn't look like it's recovering anytime soon. Global 100, I currently have $3,941 in this account. It's currently up $497, up 14.46%. Now this has been really good, although it hasn't given out much dividends, because as you guys know, big global companies generally don't pay great dividends. It's not like Australia. Australia has a really good cultural thing of giving out a lot of dividends, where big American companies don't, and American companies pretty much own the global market. So yeah, but up $500 is pretty solid, up 14%. It did have a little bit of a dip at one point. I was pretty much negative on this, but it's definitely climbed a lot since then, and it's just been climbing super rapidly pretty much since the start of this year. Since January start of this year, it's gone from $94 to $112 a share. Then we got Aussie Top 200, obviously the best 200 Aussie stocks. I didn't put too much money in this because I have another big Aussie ETF that I actually much prefer, and luckily I didn't, because Aussie Top 200, I have $1,079 in this company, or this ETF, and it's down $51, which is 4.5%. So it's not going too well. I had this for ages as well, and it looks like it really doesn't change too much in price. It kind of has big drops and then recovers. And yeah, I guess I just got in at a bad time on this one, but hopefully one day it'll start slowly increasing. It does pay a good dividend. I'll check the dividend on the screen. I can't see it right now. But then we got health-wise, a bunch of health stocks. I have $1,373 in it. It's up 9%, so I made $114 profit on this ETF. As you guys can see on the screen, in the last year it's been incredibly bumpy, but it's still giving me good returns because I invested it in about 2 years ago in 2020, I believe. So you can see it had a big dip, and that's probably somewhere where I invested a fair bit of money in. Then we have Tech Savvy. Now at one point I was up like 20-30% on this ETF, but it did have like a big drop, same as Global 100, where I was pretty much equal. But then since the start of this year, since January 2023, it went from $24 all the way to $34. That's a huge increase. What's that, like 33%? 30-ish%. But I have $5,861 in Tech Savvy. It's up 13.26%, giving me $686. Then, last but definitely not least, I have Aussie Dividends, which I currently have $6,528 invested. It's currently down 1.96%, so I'm down $130. However, this has definitely paid for itself in dividends. Just a loss, obviously, not the whole amount, but it gives crazy dividends. But in the last 12 months, investors were paid 11.3.1% per annum on their investment. That's why I definitely like this ETF. This is the ETF that I much prefer over the Aussie top 200, just because it pays a much better dividend and it's actually performed better in terms of market price as well. So in total for my CommSec pocket, I have a total of $22,000 invested, and my total profit slash loss right now today on July 4th, 2023, I'm up $898, not including dividends. I would have been paid, I'd say probably a few $100s in dividends as well. So I'd be up well over $1,000, and that's 4.16%, down 0.24% today. So take it as you will. Sometimes it goes up and sometimes it goes down. But now moving on to the more exciting stuff, we have our actual stocks that I've been stock picking. Once again, I use the CommSec app. The only problem with CommSec app is it charges a $10 fee for each stock trade, which is pretty standard. I know NAB, I think, charges $12, so it's a little bit lower than NAB, but it's a lot worse than the CommSec Pocket, which only charges $2 per trade. So CommSec Pocket is really good for dollar cost average in the market, which is when you invest, like, let's say every month or every single week, so that you kind of get a good average of the market. You know, you buy some parts in the highs, some parts in the lows, so it kind of evens out, so you don't end up accidentally buying just all in the high. So our first stock is ASM, the Australian Strategic Materials Ltd. I believe I made a video on this company. It's actually not doing too well. It's currently down 19% since when I bought it. I bought it for $1.52 a share, and it's currently trading at $1.23 a share. Currently worth $1,307. So that's how much money I have in it right now. And as I said, it's down 19%. I have a feeling it might bounce back. You can't quote me on that. Obviously, this is not financial advice. I'm just showing you guys what I have my money in. Then we're moving to CBA, which is the Commonwealth Bank of Australia. Obviously, I have to invest in the bank that I'm putting my money in and trading on, because I'm giving them a lot of money, so hopefully they can give me some back. I have 16 shares at my purchase price was $94.18, and now they're trading at $100.51. So I have a total market value of $1,608. So I've made $101 on them, not including dividends, and up 6.7%. They give a fairly good dividend. They're currently giving a dividend yield of 4% per year, so it's pretty good considering they're up a fair bit as well. So like the total return, I guess, is closer to 9%, but they're definitely just a blue chip Australian company that you can't really go wrong investing with. Now I have my biggest mistake. I have Beta Shares Crypto Innovators ETF. My idea behind this was kind of when crypto was starting to go a little bit crazy again. I thought, you know what, I'm not going to invest in crypto because I don't really believe in any singular coin, but I definitely think that there's going to be some place for crypto in the worldwide market eventually. So I thought, you know what, let me invest in all the companies, but I'm not really sure which specific company will end up being the #1 company. So I thought, you know what, let me put my money in an ETF that I thought might do well, and it definitely did not do well. At one point I was down 80% on this share. My purchase price was $10 for 52 units. Luckily I didn't put too much money in it. It's currently trading at $3.40 per unit. So I'm down $353, which is down 66%, and I would rather just move on because it doesn't even pay any dividends. Next, we have Beta Shares Geared Oz Equity Fund. So this is obviously a geared fund, which means high risk, high reward. As I told you about the Australian stocks, they haven't really been going crazy or anything. They've kind of just been staying the same, and it definitely reflects in this ETF as well. My purchase price was $24 for 74 units, $24.57. It's currently trading at $24.49. So I'm down 0.36%, negative $6. Really, I don't care about that. I believe it will going to go up eventually, so I'm holding. All my stocks I'm holding, even with the crypto one. The crypto one I might sell eventually because I don't think it's going to go anywhere. But even ASM, where I'm down, everything else that I'm down, I always think it's going to go up. That's why I bought the company, so I'm going to be holding forever. Luckily, with the Geared Oz Equity Fund, it's giving a dividend of 6.35%. So that's pretty good considering it hasn't really moved in price at all in terms of the stock. So I guess I'm making 6.3% per year on that, which isn't too bad. Next, I have my big winner. Okay, at one point I was up crazy on this. I was up like 80-90%. However, it's gone a little bit down recently, and that is Mineral Resources. I made a few videos on this company. You can check them out. I'll show them on the screen and leave a link in the description. I really believed in this company. It's a Western Australian mining company. It's where I'm from. They do a lot of lithium mining as well as other types of mining. I think they're big in steel or coal, but I mainly invested in them for their lithium. My average purchase price is $53.61. I've bought this a few times, so I've never sold. I have 68 shares and they're currently trading at $72.74. I think at one point my purchase price was like $35, but obviously I bought when they're a bit more expensive. I've probably taken a loss on some of my purchases of Mineral Resources, but overall I'm still up a fair bit. Current market value is $4,946, up $1,300, which means I'm up 35% on the stock. And they also used to pay a fairly good dividend, but their dividend has been dropping. Their dividend now is 2.6%, which isn't absolutely terrible considering how much they've gone up, but it's still not amazing. And you know, it's nice to have. Next up, we have Rio Tinto. I have 8 shares. I bought at $96 each. They're currently worth $114, so they've done really well. I should have invested in more. So it means I'm total up $114, which is 18%. Man, that's so sad. I should have put more money in it. But they also give out a good dividend at 6.2%. Another just big blue chip company that you can't really go wrong in. Then I have Pilbara Mineral Ltd. This is another company like ASM. They mine rare minerals. I made another video on them as well. I think it was the same video. They mine a lot of rare minerals that are going to be really helpful in building computer chips and stuff like that, as well as big things in like military. China owns a lot of the resources that are required in US military technologies, but obviously China is like their biggest competitor in the global warfare space. So if China stops providing the USA with those minerals, then Australia can become a big part of that. And that's why I kind of invest in these smaller mining companies that focus on those types of resources. There's another company that's also really big in that space in Australia that I'm going to be posting a video about soon. I haven't invested in them yet, but I'm definitely trying to do a lot of research into them. They've also gone crazy for me. I invested in them at the same time as ASM. I kind of hedged my bets by investing in both of them at the same time. Purchase price was $3.65 for 235 shares. They're currently trading at $5.28, which means my market value is $1,240. I'm up $382, which is 44.5%. So they've done even better than Mineral Resources have recently since I invested in them. I don't believe their dividend is as good, however. Actually, it's the exact same pretty much as Mineral Resources, giving out a 2.1% dividend, which is alright. It's nothing crazy, but they're definitely more of a risky company. They're not blue chip or anything, so, you know, that 45% reward is, you know, it's kind of risk to reward. They're not guaranteed to go up like Rio Tinto is, even though Rio Tinto isn't guaranteed to go up. It's just more likely to go up and just be consistent. But something like PLS, you know, can big risk, big reward. But Wesfarmers is another blue chip company I invested in. Bought 58 shares at $45 each. They're currently trading at $49, which means I'm up $248, which is 9.5%. They also pay a nice little dividend of 3.5%. Nothing crazy, but it's nice. It's a nice little extra on your money. My current stock picking journey, I have $14,863. Currently up 11.2%. I started probably a year and a half ago, I guess, with the individual stocks, and yeah, up $1,500, which is 11%. Something nice. Oh my god, you said your stock portfolio is worth $40,000. Yeah, I know, I had to clickbait a little bit, but you know, $37,000, $40,000, pretty much the same. You know, you just round it up. It'll be worth $40,000 by the time I hit 21, as long as the markets don't crash, or before I hit 21, I guess. But hey man, if you guys enjoyed the video, please leave a like, subscribe, let me know if there's any other videos you guys want, and I'm out. See ya.